Hi, everyone. We are doing sort of a panel style today, so it'll be very conversational. I'm going to go ahead and introduce everyone, and they will give a little more deeper dive into who they are, who you'll be listening to today, and then we'll jump in. So we have Lindsay Deno with Keller Williams Realty. She'll be our first to introduce herself. Then we'll go on to Jason Everett, who's with Ruoff. He is a mortgage lender. And then Dane Harper is with Indiana Farmers Insurance. So go ahead, Lindsay. And Lindsay, I think you're still on mute. I can't hear you at least.
Nope, you're right. These dang Zoom meetings. So I'm Lindsay Deno. I'm with Keller Williams, and I have been with or in the business for about 2 years now. And I recently went on my own, but I'm still with Keller Williams, so I'm an independent agent. And before that, I actually worked at a bank for a couple years, and then I actually taught 8th grade English at Clinton Central in the area prior to that. So I definitely am all about educating through the process of buying a home. But then kind of personal note, I've been married for almost 9 years, and we don't have any children yet. We do have a cat. He's our baby right now. So and yeah, I like reading, decorating. So yeah, that's just a little about myself.
And Jason, you can go ahead next.
Hello, everyone. Jason Everett with Ruoff Mortgage here in Lafayette. I have been with Ruoff for 6 years, born and raised here in Lafayette, went to Purdue, studied finance there. So really kind of found my niche in the mortgage space here at Ruoff. Much like Lindsay, I enjoy kind of educating throughout the process. Obviously, purchasing a home is probably the largest purchase you'll ever make. So me ensuring that you're aware of all of your options and you kind of know pros and cons of going each different direction, that's really what I pride myself on. I am married. My wife, Valerie, is an RN here at IU, and we have a 2-year-old daughter named Demi. I enjoy playing golf and ultimately just being outside. So thanks for having me.
And our last one will be Dane today.
Hello, everyone. Thanks for joining us today. I'm Dane Harper with Indiana Farm Bureau Insurance. I am a multi-line agent, which means that I offer products for about anything you want to insure, but mostly homes, autos, life insurance, that kind of thing. I have been in my role here in Tippecanoe County for about a little over 2 years. Before that, I'm originally from the Rensselaer area. I am also married to my beautiful bride, Cecilia, and we have one son who's just over 13 months. His name's Elliot. One thing about Farm Bureau that I'll kind of throw in is we do still have physical offices. My office, for instance, is located here on the south side of Lafayette at 18th and Veterans Memorial. And something a little different about our company is a lot of companies will like to quote insurance a lot. I take a different approach, kind of like Jason and Lindsay's, where I want to sit down and meet with you and kind of educate you, learn about your goals and that kind of thing, and then help you design a plan to achieve that kind of thing. So that's all I got.
All right, thanks guys. So I'm going to start the conversation. I just want to remind everyone that the chat and Q&A functions are available. So when using that, send it to all panelists and attendees so that everyone can see the questions, and I will fit them in along the way. We will have a time at the end for questions as well, but if one pops up, just send it through the Q&A and I will get it taken care of. So to start off today, buying versus renting. When we're starting that conversation, thinking about which way to go, there's obviously pros and cons to each. So starting with Lindsay, can you kind of talk about pros and cons of buying versus renting and hit on the current real estate market? And don't forget to unmute as well.
Gosh dang it. Thanks, Bree. So I know kind of everything that's going on right now, it's kind of, people have been asking me how the market's going. And just kind of to preview, I just put a listing on, this is still gonna be related, but just to give you an idea of how the current market is, I put a listing on at about 9:15 this morning, and it's listed at 158. So it's in that little special niche between the 100,000, $200,000 range on the south side. And we have 18 showings scheduled between today and tomorrow already. So we're already expecting multiple offers, I would expect, with 18 showings. So it's a little intimidating, I think, as a first-time home buyer when you hear that. There's definitely perks to buying over renting. I mean, the number one perk is you're buying an asset rather than buying someone else's asset. So you're building equity by, actually paying down your own mortgage and not paying down someone else's mortgage. Then on top of that, interest rates, and I know that Jason's going to touch on this, but are at an all-time low. And so, we talk about how prices have maybe increased a little bit in our area, or they have over the past couple of years, but interest rates are at an all-time low. So it kind of levels itself out. So it's still a good time to buy a house. But with all the competitiveness, you just have to, make sure that someone is educating you through the process, essentially. Obviously, like cons, so when you own a house, you're in charge of all the maintenance, whereas when you rent, you can call the landlord to fix something. So that just means that you want to make sure that you have cash reserves in case something does come up in an emergency. So just something to think about as you're preparing is, do you have enough to cover those expenses if something were to go wrong? We're on the verge of probably losing our water heater, but we're just gonna knock on wood, and but we're preparing, that we are, so we're prepared when that happens. As for, is there anything else for you that, I know we kind of mentioned a lot of people use online forums to find houses, so Zillow, Realtor, Trulia, and those are good places to start, but we pay for a technology that basically sends all of our information out to those websites. So I have the first access to that, and it's very fast to Zillow. But sometimes Zillow is a little incorrect when it comes to home values, or even if a property is active or not. So it's definitely important to get in touch with an agent, and then I just pull it up and make sure that it's accurate. So I think that's all. Well, Jason, did you have anything to add to renting versus buying?
Yeah, no, I think you covered most of it. The big thing from a lender's perspective is that you're building equity. Like Lindsay mentioned, you're building your financial future as opposed to paying for someone else's financial future. The big misconception about buying versus renting is people think that they have to rent because buying a house requires a 10 or 20% down payment, and that's just not the case. So if you're one of those folks who is looking to rent just because you don't have a ton of money to put down, there are programs out there that are little to no money down, anywhere between no money down and as little as 3 to 3.5%. So a lot of common misconceptions that are out there, or reasons people use for not looking into buying and just kind of jump right into renting. So something else to kind of consider if you're one of those folks who's on that fence. So.
All right, so when we're starting to have that conversation, Jason, I'll go back to you. Who's the first person you should talk to when you're thinking of buying a home?
Sure. Yeah, that's a great question. And a question I think Lindsay and I both get often. So who should you talk to first is probably a lender. I think both realtors and lenders alike would like to see that kind of shift. Most people just go out to a realtor, they see a house they like that kind of piques their interest, so then they talk to a realtor first. Realistically, you should talk to a lender first, because a lot of people don't know what goes into a mortgage. What does that entail? What does my monthly payment include? How much can I afford versus maybe how much I'm comfortable with? So having those kind of upfront discussions with a lender would typically be the tip of the iceberg when you're starting the process. And then lenders would then pass you off to a realtor. And then you would be armed as a buyer with my price range. What am I comfortable with? payment, those sorts of things. And then you could go to your realtor and say, hey, I know I'm looking in this price range. I want this payment, and I've already talked to this lender. So that's typically what we should see as you begin looking into purchasing. So.
And I think I agree with Jason on that. It's all about educating. So then if someone comes to me and they see a house that they want, but they haven't been pre-approved, obviously I want you to get that house, but we kind of have to make sure that we're not getting your hopes up by seeing a house that you fall in love with, and then we find out that it's outside of your budgets or something like that. And then also knowing Jason's going to be the one that tells me, do we need to ask for closing costs, which can get confusing, but I mean, basically he's helping guide me on what I'm putting in that offer for that house. And then also I want to be able to sit down and talk with you about what you're looking for and educate you through the process, the paperwork. So obviously looking at houses is the most exciting part, but we also want to make sure that you're getting that front loading. That way you can be an educated buyer. So.
Perfect. So how soon should we start having that conversation, especially if there are things like credit score issues or things like that?
Yeah. So I think that most people will start that at least a month or two prior to beginning the search. So again, in an ideal world, you would talk to your lender or your banker or whoever you're going to get your mortgage through. They would give you that information, and then you would then go talk to your realtor, and you could immediately begin looking at homes. Now, what we oftentimes see, and Lindsay can probably vouch for this, but what we oftentimes see is we see a realtor will meet with a client or show them houses as a prospective buyer. They'll find something they like, and then they're calling me as the lender and saying, hey, in the next half hour, we need you to get us pre-approved and send a pre-approval letter so we can make an offer. So that's kind of backwards from how it should be. But again, I think giving yourself a month or two to find the right spot, that way you don't feel like you're rushed. You don't feel like you're rushing into your loan options, or you're not as educated as you'd like to be.
And how does having multiple loans or multiple loan inquiries during that initial process affect their credit score?
Sure. So that's going to depend on the financial institution. But as a rule of thumb, if you're shopping for, say, a mortgage, and you have 3 to 5 different institutions that you're shopping with, if within a 30-day window, all of those entities run your credit, that typically gets lumped together as one inquiry. So I would compare it to maybe when you're automobile shopping. So a lot of times people will go to the dealership and they'll see 5 or 6 inquiries on their credit. All of those inquiries are not necessarily tearing your score down because they're run together. They see, as the credit bureaus see, that you're inquiring or you're shopping to buy a vehicle. So all of those inquiries they're a result of you shopping. Same thing with a mortgage, but that window is usually between 2 weeks and 30 days, depending on the institution and kind of how they're reporting to the agencies. The credit agencies happens and when that takes place.
So Dane, I know some people have heard of an insurance score versus a credit score. Can you talk about the difference between those two?
Yeah. So, as Jason was kind of hitting too, credit scores drives a lot of things, right? And it also drives your insurance rate, believe it or not. A lot of companies have went to what they call an insurance score now. So insurance score takes your credit history, and it also takes your claim history as well. So, and they kind of balance that out and give you a score, basically tells us what kind of client you are and what your likelihood of having a claim is. So, the better your credit score, most likely the better your insurance rate is going to be. So that, something to keep in mind too, when you're working on your credit history, that's going to help you on the insurance side as well.
So we've had a couple questions come in. I want to hit on one of them now while we're still on the topic. So Jason, what kind of options should we be looking for to get lower down payments?
Yeah, so lower down payments right now with kind of COVID state we're in, things have changed a little bit in the way of guidelines and restrictions and those sorts of things. But your best no money down option is probably a USDA loan. And again, different lenders will have different options. But the nice thing about RUOF is that we offer nearly every option, whether it be a government loan all the way up to an investment property. So rural housing through the U.S. Department of Agriculture is a no money down, and you do have to be purchasing outside of city limits or in a USDA eligible area. After that, there are some down payment assistance loan programs. There are some income restrictions and credit requirements for those programs, but those are down payment assistance through the state of Indiana. And then you get into just your standard, 3% down conventional loan. Someone who's got good credit, low debt to income, they can get away with just 3% down as a first-time home buyer versus the standard 5, 10, 20% down on a conventional loan that most people assume you have to have. And then probably the most popular, most common loan for first-time home buyers is going to be an FHA loan, which requires 3.5% down, just because the Federal Housing Administration is quite a bit more lenient with regard to credit scores, credit requirements, and then they allow a higher debt to income ratio as well.
Live question from the audience here. Can you define first-time home buyer? Is that literally just the first time you buy a home, or is there like a certain amount of time that passes and you'd be considered a first-time home buyer again?
Very good question. If you have not owned a home in 3 years, you are considered a first-time home buyer. So you do not physically have to be, or I guess literally have to be, a first-time home buyer. If you're someone who owned a home in another state, you transferred here for a job, or you relocated and you've been renting, if you have not owned a home or had ownership interest, been on title, those sorts of things for 3 years, then you're considered a first-time home buyer. Very good question.
Very cool. So talking about the timeline of buying a home, Lindsay, can you hit on what it looks like when we're making that first offer to try to buy the home?
I sure can, and I remembered to unmute this time. So essentially when you write an offer, you are going to set a deadline for there to be a response to your offer. So when you write an offer, it's either going to be accepted the way it is, it's going to be rejected, or it's going to be countered. And so countering just means they're going to negotiate with you essentially and come back with some type of change on the offer. So there's always going to be a timeline now of response time. So on the one that we're getting today, if there's multiple offers and we wanted to, we could say we want everyone's highest and best offer, which in this market, we're already telling our clients that you need to probably, depending on the house in the scenario, already need to go in with it expecting to give your highest and best offer. And so then there's a time where we would just go over all of those offers at the same time and accept one of them. And once your offer is accepted, I always send like a timeline of these, because sorry, I'm kind of like rambling here. There's timelines that you put in that offer that then I'm going to send an email and guide you through that process. But one of the first steps would be reaching back out to your lender like Jason and getting the application going. We're going to schedule an inspection, and which we'll talk more about later, and then just kind of go through the process of once the inspection's done, it's kind of like a waiting game with the lender is just doing things behind the scenes. So, and then you usually close in 30 to 45 days, depending on the type of loan. So does that help? Like that was kind of convoluted. It would be helpful for a visual. I don't know if Jason wants to add to that on the lender side of what's going on behind the scenes.
Yeah, sure. I think that 30 to 45 day window is perfectly accurate now. Again, that'll depend on, like Lindsay mentioned, the loan that you're obtaining, the loan program, and that has a lot more to do with it. Now we're seeing just some delays being caused by appraisals because there are so many homes being purchased and refinanced that appraisals are typically a 7 to 10 day turnaround are now taking a couple weeks to get back. So RUOF as a lender, I mean, from application, so once you have received an accepted offer with your realtor, so Lindsay would then send that over to me. And from that point forward, in the next 2 to 3 days, we need to have signed your loan application and submitted your formal loan. So from that point to the time we're closing, we like to be no more than 20 to 25 days, okay? Because the contract would then have, usually a 30-day or less window. So if we get the application same day or next day, a couple days to make application, we're ready a couple days, 2-3 days in advance typically. That way we're not down to the wire. But we usually use a 30-day window in the industry. And then obviously if things move pretty quickly or you're a strong buyer, things go smooth with your loan and the appraisal comes back okay, I mean, we can close loans as quick as 14 to 18 days sometimes, and we're seeing a lot of that now, just due to people wanting to move a little quicker because of all the chaos that's going on. So typically a 30-day window both ways.
So moving on past the timeline, when we're talking about our budget, obviously there's a lot of considerations outside of just the home price. We do need to get pre-approved for a certain amount of house, but there's definitely expenses outside of that. So Jason, can you talk about, you kind of hit on different types of loans have certain amounts of down payments, but how much should people be putting down typically?
Yeah, so if you can put down 20%, you always want to put down 20% if you can. Obviously, we talked about some of those lower down payment or no money down options as well. But on top of your down payment, there are other things that go into purchasing a home. So Lindsay will touch on a couple of the things on the real estate side with regard to maybe earnest money and inspection stuff. But from a lender side, there are really 3 components that dictate how much money the day of closing are you going to need to bring. And that's going to be your down payment, your closing costs. Closing costs typically entail any of the costs, typically third party, that go into producing a mortgage. So you've got your lender fee, your title fees, and your appraisal fee. So with us, all of those things lumped together, you're usually looking somewhere between $2,300 and $2,500. And then on top of that, you've got your prepaids, or we call them escrow, and Dane can probably touch on that, but that's going to be your annual insurance premium and your property taxes. So those 3 components are going to dictate how much money you ultimately need to bring. And then, as Lindsay mentioned previously, sometimes we can negotiate that some of or all of those additional expenses above and beyond your down payment are going to be paid by the seller. So that's something that would be negotiated with Lindsay on that contract.
Now, Jason, kind of reiterating on the taxes, if we're making an offer and we're asking for them to be prorated, that means that it's going to be a credit from the seller. That will cover the tax portion of it, at least.
Yes, at least a portion of it, right. Because you're always required to pay a few months of taxes in advance to begin building your escrow cushion. So when taxes if we're closing now, you've got a tax bill as a new homeowner due in November to the county. So if you buy a home between now and November, you're going to collect, your lender is going to collect a few months of taxes to ensure that that tax bill is accounted for when November rolls around, and you're not having to pay additional money out of pocket at that time.
Yeah, thank you.
Mm-hmm.
So then going off of that, I know that your appraisals are paid at closing, but some lenders, depending on their products, do ask for appraisals up front. Have you heard of that as well?
Yeah, absolutely. Some require appraisal deposits or what have you, and you're usually getting credited back for that at closing. So usually appraisals, depending on the institution, are going to cost you somewhere between $450 and $550 or $600.
Right. Okay, but sometimes you will have to have that closer to the front of the process rather than on the day of closing.
Yep, absolutely.
And then on top of that, okay, thanks. And then a couple days, usually within 2 business days after you get an accepted offer, we would put down some type of earnest money, which is typically a good faith offering. And the going rate is usually like 1% of the purchase price. So depending on if you're looking at the $1,000 to or $100,000 to $200,000, you might be putting down $1,500 for earnest money. And then also you have to take into effect that take into effect that you're going to be getting an inspection, and that depends on the size of the house. But I would say usually $250 to $350 for a whole house inspection. So those are just kind of your upfront costs. And like the appraisal, if they take an appraisal deposit, the earnest money also is going to get credited back to you at closing. So I don't know if there's anything else anyone else wants to reiterate on that.
I think that was great. Definitely some things that came to my mind were, homeowners association dues, property taxes. Like when we moved to West Lafayette versus Lafayette, were way higher than I thought they would be. So there's definitely some outside costs there. Hitting on you guys who are local professionals, obviously we are all in a very digital world. There are 800 numbers, there are websites we can get these services from. So from the cost of, working with professionals, who pays for that? Is it, a commission? How do you guys get paid for what you do?
Sure, I'll start. So most lenders, again, depending on if it's like myself with Ruoff, we're an independent mortgage lender, meaning we just do mortgages. I'm paid a percentage of the loan amount. So none of the cost of you doing your mortgage as a buyer go to me. Okay, so none of the fees, none of the costs, none of that's forwarded to me. My company pays me, 30 to 45 days after a loan closes based on a percentage of that loan amount. Okay. So I get paid 1.1%, whereas some other lenders, let's say they work at a bank. Okay. If you work within a bank, typically you're paid a small salary, and then you get, they call it a bonus for each loan that you close, whether that be a set amount or again, a percentage. So lenders are going to get paid different ways, kind of depending on where you work and how your pay structure is set up. But I myself, none of that cost, and that's the case for most lenders, is none of the cost is going to be directly paid to me as the lender.
Same thing. So it's because buyers already have to bring money to closing potentially. It's kind of been customary for the sellers to pay both agents. So it's coming out of their proceeds, because typically when a person is selling their house, they have money that they're making on the house because they basically paid and gained equity. So it's customary for the seller to pay. So as a buyer, you're really working and getting representation for free in a sense. So I don't know if that helps.
And to confirm with Jason, there's no cost just to meet and get a pre-approval, correct?
Nope, not with me. So, some institutions do charge like a $50 application fee, but Ruoff, we have no cost for, shopping or looking or educating or, kind of inquiring about where your credit is and what kind of things you need to do. And then kind of back to Lindsay's point as well. I'm glad she touched on that, because it's a very common misconception or misunderstanding. When I meet with buyers, they ask me, do I pay you now? How do I pay my agent? And the big thing is that as a buyer, you don't pay anything typically for your realtor. Okay, that's all going to be paid by the seller. So you don't have to worry about paying that 3% or that commission as a buyer. All you really need to worry about is kind of what we're discussing on the loan side and what that entails.
Well, Dane, let's move on to your specialty, the insurance side. So when it comes to protecting our homes, what things should we be considering?
Yeah, so the big thing when you want to insure a home is obviously you want to take care of the home should something happen to it. So, if it burns to the ground tonight, you want to make sure that there's enough money, it's insured for the correct value in order to rebuild that home. but also we think about the liability part, which is probably a bigger thing that people don't realize. You know, what happens if someone comes over to our house and is jumping on the trampoline and breaks a leg, and they go to the hospital and there's a lawsuit involved and blah, blah, blah. You know, that's the kind of thing that can really, really disrupt your life. So that's something you want to make sure that you're taking care of as well. So those two are the biggest risks, I guess, you take on when you buy a home, is the liability, and, you know, if something bad should happen to your home as well. You know, from an insurance standpoint, you know, something else you want to consider is always your deductible. You know, the deductible is the amount that you will pay out. Let's say there's a tornado that comes through and takes part of your roof off. You always have a deductible, and that's the part that you pay. So whether it's $1,000 or $500, whatever you select, you pay the first $500, for instance, and then the insurance company kicks in and pays the rest. So knowing what that deductible is, or what that out-of-pocket expense is before you have those kinds of things pop up is pretty important. You know, Jason hit on it before, that, you know, a home is probably the biggest purchase you'll ever make. You know, you don't really want to trust that maybe an online company. In my experience, it's helpful to have someone, if you're insuring that big of a risk, you want to have somebody you can call and talk to, or stop in and visit, you know, when you have those kinds of situations.
And Jason mentioned this word earlier, escrow. Can you kind of describe what that is and how it works?
Yeah, so escrow, a lot of people, when they insure their home, what they'll do is they'll set up their escrow through the lender. And what that means is basically you will not pay your insurance premium directly to us. It'll be rolled into your mortgage, and we'll actually bill your mortgage company for it. So a lot of times, you know, this is an expense that you'll see, but maybe not need to come up with money with right away. For instance, if you insure your home for $1,000, you're not going to have to come up with $1,000 that day. You know, they're going to roll it into your mortgage, and that's going to be a part of your bill. Now, going forward, you know, as you purchase your home and get down the road and your payment starts to increase, a lot of people forget about this part of it, that it is escrowed and it's rolled into your mortgage. So all of a sudden your mortgage payment goes up and you're wondering what in the world is going on here. Typically it's your insurance has changed, or the property taxes have changed, and that's what's causing your payment to increase. So something to remember, you know, once you do get that home purchased and move down the road.
Okay, and flood insurance, that's not typically included to my knowledge, so that's something extra. Who needs that?
Yeah, so don't do flood insurance. I'm just kidding. You can do it. Typically, you know, when you're working with Lindsay, if your dream home is in a flood zone, then I guess go with it. But try to avoid those homes that are in the flood zone that have the tendency to flood. A, it's a total hassle if your home does flood. And B, flood insurance is expensive and it's required. So it's not something that you can, you know, get away from. It is something that you have to do. And typically now, in the last several years, we've had some historic 100-year rains, right? So we've seen what homes flood and what homes don't. So you kind of have an idea when you're looking at a home, or, you know, you're working with Lindsay and looking for homes in an area of what areas will flood and that kind of thing. So, you know, a typical homeowners policy will cover water from the inside. What that means is if a pipe breaks, your roof leaks, homeowners policy is going to cover that. Flood insurance is going to cover water from the outside coming in. So, you know, if there's standing water in front of the house and it makes its way inside your basement, that's going to be where flood insurance kicks in.
Question for you, Dane.
Sure.
I know that there are some areas where if it's in a floodplain, the county won't issue permits. So if you are covering it, but the county doesn't issue a permit, then insurance at that point doesn't matter, correct?
Correct. Yep. The county's is, you know, the permits are obviously going to have the final say, or the say before you ever get started. So yeah, definitely if they want to issue a permit, we're not interested in insuring it.
Yeah. Okay.
So talking about protecting our homes, Lindsay, with a home inspection, how important is that, I guess, on the buying and the selling side to have that done?
Can you hear me? Okay, sorry, I said I was muted, but I'm like, me and the mute, it's fun. So I think I always am gonna recommend an inspection, even if we know that the seller isn't going to make repairs, because there are some sellers that just don't have the funds to do any repairs, or they have no desire to. But the inspection is kind of a health report of the house for you. So even if you don't request repairs, it's going to at least give you an idea of if there's any major defects with the house. So, and if there are major defects that haven't been disclosed, you always have to give the sellers a chance to remedy the problem. So hopefully everything gets fixed and we can continue on getting you into your dream house. But there are times where, you know, it might be too big of an issue that is not going to be fixed, and then we can mutually release and go a different direction. So, and there's obviously more details that we would discuss with that being said, but, and then on the seller side, when you go to sell, you can have a pre-inspection done and kind of get all the potential repairs taken care of. That way we can put that it's been pre-inspected, that the repairs have already been taken care of. But the buyer still has a right to have an inspection done for their own knowledge. But that can also just kind of be helpful when you're going to sell your house, just to kind of know if there's anything major that you might not have known about. So,
and the buyer, that would be that would be an expense the buyer pays for, right? If they want an inspection.
Yeah. Yeah, if you want an inspection, you're gonna probably pay that $250 to $350 depending on the size of the house, but that's kind of approximately the cost of most inspectors in this area. So,
okay. Well, I wanted to make sure we are hitting on the questions from the audience. So, and I'm actually going to answer this one because I'm going through it right now, but where do you start when you want to build a home? The lender, builder, or landowner? So I'll start just because I'm in the middle of it, but you guys feel free to answer as well. So we started with a realtor, actually, you know, to help us find the land. We did not already have a lot, so that's where we started. And he also referred us to a home builder. So he set up interviews with multiple different builders for us to pick from. That's a really long process. So talking timeline, I would start like a year before you want to build, because it's going to take time to find the land, to pick the builder, to pick the floor plan. We've changed our floor plan so many times. So for us, the realtor was very helpful. I did get a lot of advice as to, you know, some builders are going to charge for you to use a realtor in that conversation, some won't. So that's something to bring up as well, is, you know, am I going to get a different price to use a realtor versus not? You know, we all get paid, we're all professionals, we all get paid for what we do, but that was a consideration for us. And then every builder prices differently. There are custom builders, there's, you know, you can build just in a neighborhood from a pre-existing floor plan. I mean, you can get as custom as you want. So from my experience, it was very helpful to have a realtor involved, and he guided me through all the steps. We're actually closing on our land today, so that's very exciting. But I'm going to open it up to you guys, since this is what you do all day, every day. What would you guys say when someone wants to build their home, where to start and what to consider?
I would say starting with a realtor. Again, if you wanted to make sure, again, Bree, you're a different animal because you are in the financial industry, so you're kind of aware of what goes into that. But those folks who are not quite sure, hey, what is my budget? You may want to talk to a lender first, and then get with your realtor to set up those builder appointments. But yeah, I certainly think that having a realtor represent you is invaluable when building a home.
and I, of course, second that. So a lot of people, I didn't actually know before I got into the business that you could have a realtor when you built a house. But if you think about it, their builders are represented typically. And so to make sure that you have representation is just also as important. And a lot of people also don't think about doing home inspections. I don't know if you're doing one, Bree, but to also have a home inspection on a new build as well. So, because I mean, there's still mistakes even in new construction. So, and then kind of going along the financial side, You're proud on a land, sometimes it's hard to get a loan, correct? Not hard, but finding the right person, Jason, that will do a land loan, and then
Yeah.
typically asking for more down. So just things to keep in mind if that's a route you want to take. But there's a million different ways you can put it together. So whether the builder is the one fronting the loan or the land, I mean, definitely a lot goes into it. So.
Yeah, and I will say that representation, having a middleman who kind of, has his foot in the game, but, can kind of tell me he's experienced, could tell me, they're walking all over you, or this isn't right, the math's not adding up, or whatever. Just having someone who has more experience in building homes than someone like me who never has was very helpful, and having kind of a negotiator in the middle, so it didn't seem so personal to me to say, what we wanted, what we deserved. So yeah, I'd 100% recommend a realtor for sure. Okay, switching gears a little bit, talking about the other side, when selling a home, what changes and what should we plan for differently when it comes to timeline, expenses, everything? Lindsay,
Yeah.
if you want to.
So it's really just a different animal. So I really initially would like to just come over and take a look at your house. That way I can pull comparable properties that have sold recently. That way we can come up with a price. Is that my noise, my ding? Can you hear that? So just making sure that we price it properly. And once we get it priced properly, depending on your price range, will kind of dictate what our timeline might look like, whether it's going to sell quickly or if it's in the higher price point, if it's going to sit a little bit longer on the market, just because there's not as much demand for that. And going over repairs, if there's any repairs that need to be done. Are you going to do the pre-inspection and to know if there's anything that needs to be addressed? Are we going to do some staging, some painting? Are we going to declutter? And then really from that point, it's just figuring out where are you going to go when your house moves, especially if it's going to sell quickly. Do you have a place to go? Do we need to buy? Getting pictures taken, going over the documents, and getting it on the internet or on the MLS. So really, I mean, once we know what your plan is and what we need to do to help you get to the next, point, that's really kind of starts the process, but it's different for everyone. So.
Jason or Dane, do you have anything different on your side when selling?
I know a lot of times, and I think Lindsay can kind of vouch for this, sellers will, before they list their house with a realtor, they'll contact a lender just to make sure that, hey, my finances are in order. If I make this much money from selling, here's kind of my price range and here's how much I'm looking to put down. So we can run a lot of those scenario-based situations and, give you an idea of, hey, if you're looking, you're selling a $150,000 house and you want to buy a $300,000 house, here's what you're looking at payment-wise if you put your net proceeds down. So having that conversation, because I've seen it before too, where people will list their house for sale and then they realize, holy cow, I made a mistake. I had a late payment or something, and now I don't qualify to buy anything. So now I'll have to rent until I get my credit where it needs to be. So again, that's a little bit more rare, but we've certainly seen that where someone doesn't do their due diligence with the financing before putting their house on the market to sell.
Yeah, and I would just add, have a plan. I've had a lot of clients that are interested in selling, list their house, and in 3 days it's sold, and they're like, "What are we doing now?" So, from a personal side, just have a plan, be ready to go, kind of have an idea of which way you're heading.
And I just saw Haley had a question about what are the costs that the seller is responsible for. And so even though Jason's the money guy, when it comes to selling your house, I always do a net sheet. So I'm always going to be the one who is recommending a price point based on the comparable houses that have sold. And then I will do a net sheet based on that. So you're going to have to pay off your mortgage if you have one. You're going to have to pay taxes. You're going to have to pay some closing costs, like title company closing costs, and then you would pay the commissions for the agents. And so sometimes it will change based on offers. So you might cover closing costs if one buyer is wanting closing costs covered. And so I will outline a new net sheet based on the offers that come in. Does that help with that question, Haley? I hope.
Yeah, we've got a couple more questions that have come in that I want to hit on before we wrap up. So feel free to keep sending questions in. One from earlier, again, around budgeting. So is there a rule of thumb for estimating maintenance expenses on an older versus a newer home, especially with more than 50 or 100-year-old homes in this area?
Yeah, I would say yes, and Dane can probably speak more to this. So the cost of getting a loan on an older home is not going to be any different. You're not going to be charged a higher rate or anything based on the year the home was built or constructed. But certainly when running an estimated payment on an older home, I'll probably pad your homeowner's insurance quote. Like Bree, you can probably say on a new construction home, a lot of people don't know this, but if you build a new home, your homeowner's insurance is super cheap because the likelihood something goes wrong with that house is very slim. Everything's brand new. Whereas if you're buying a 50 or 100-year-old home, your homeowner's insurance may be more expensive. And Dane, you can take it away from here, but definitely something to consider when estimating payments on older homes.
Yeah, absolutely. Your insurance is going to be quite a bit higher on an older home just because of the construction and the materials that were used. You also can kind of get into a situation too where, if something were to happen to that older home, we're not going to build that exact same home with those plaster walls and that kind of thing. We're going to build a different, more modern home as well. So that's something that's taken into account for that as well. As far as the maintenance, I think, a big thing is to hit on that inspection that we've been talking about to kind of get an idea of what is going to wear out or, what issues you have before you actually purchase the home as well.
Yeah, and I think, when I'm going through a house, I'm going to be pointing out like the furnace, the AC, the roof, the windows, all of those things, and talk it over with you that, this is a 20-year-old furnace and it could last for 20 more years, or it could go out tomorrow. We just don't know. And so just knowing that those could be potential costs up front or within the next first 5 years of owning that house. So things to keep in mind. I don't know that there's necessarily a good way of estimating it, but it also just depends on house to house, whether one house has a brand new roof, windows, flooring, new appliances, and has been recently remodeled, but it is a 100-year-old farmhouse, or if it still needs all of those things done. So it definitely depends on the house itself. So.
Another question that was sent in, if we have a set time we want to be in a home by, for example, like if our lease is up, when should we start the process? Is it just, 30 days to close, 1 to 2 months? How soon?
I would say from a lending perspective, it really depends on your credit, and how prepared you are as a buyer. So if you're someone who knows you need work on your credit to get ready, you may want to start as early as 12 months, 9 to 12 months before. That way you give yourself a few months to maybe make some of those changes and boost your credit score. But if you're someone who knows you're, 700, mid 700, high 700 credit score, and you've got money saved to put down, you can start as late as, 30 to 45 days and give yourself, maybe a couple weeks to find a property. So it really depends on the person and their financial situation overall.
And I think kind of going along with that, it also depends on your budget and the area you're looking in, because we also have to take into effect that houses are going really fast. And, we can do our best to write the best offer, but we might have to be prepared to lose a couple before we get one. So maybe cushioning it, when you're looking, like your time frame for looking too. So one just popped up about credit.
and I'll unmute myself. I'm having a Lindsay problem. Okay, so we are having to wrap up here real quick. So I wanted to answer this last question, which in my opinion is the most important to hear from our panelists. And so if you guys have questions we didn't answer, we'll be reaching out to you, and feel free to send us more. We'll get you the answers. But for each of the panelists, what qualities should we be looking for when picking professionals to partner with? So if Dane, if you want to start, in your industry, what should we be looking for?
Yeah, so, we kind of hit on that, a home could be one of the biggest purchases that you'll ever buy. So, we kind of talked about it earlier, but, you want, in my opinion anyways, you want someone that you can talk to. You want to know what their claims handling situation is. Are they sending someone from Indianapolis to come up and look at your house when there's a problem? Or, are they having a third party come out and look at it, or are they actually handling it in-house? That's kind of important to me. And then, also just have somebody you can pick up the phone and call if you have a question, or send a text to, or shoot an email to. If you have a question about the premium, or, is this covered or is that covered? I think that's huge. A lot of people will start out with the online companies, and as you move farther along in life and get to the home purchasing stage, that's kind of the point where you want to transition a little bit, and maybe have somebody, have a guy, I guess, or a gal if that you can contact.
Jason, if you want to go next.
Sure. So anybody who has purchased a home knows that there is not many things that are quite as invasive as buying a home. I mean, a lender is going to know everything about your financial situation, all the way from your credit score to your daily spending habits, because we've got to have bank statements. So ultimately, having someone you can trust from a lending side is very, very important. So having someone you feel open and honest, or comfortable talking open and honestly with, someone you can be transparent with and you think can be transparent back, because some of these difficult conversations need to be had. And if we know where someone is, it's a lot easier to kind of, tell them what needs to be done to get there. So ultimately with lending, it's someone you can trust, someone who's very, very transparent, open and honest with quoting costs and fees and rates. And then again, being local. There's just more accountability, like Dane said. Having had a couple properties of my own, I think it's invaluable to have, a local person that I can text or call and pick up the phone and ask questions to, as opposed to, calling Geico or one of these online, I call them cut rate insurance companies, which are great for maybe auto insurance, temporarily. But when you get into establishing a future with a family, it's pretty important to have someone you can trust and have those conversations with. So for me, it's really relationship based, and I think that goes a long way when picking a person or your guy or gal to work with.
I second all of those things from Dane and Jason. I mean, it's all about relationships, really, and we're going to be spending like 30 to 45 days together, probably talking every day, if not going through multiple houses. And so it's definitely, you can get close real fast. And I know that I start to miss people after I see them every day, and then they get a house, and everyone kind of, we still stay in touch, but it's not a daily thing anymore. So definitely relationship building, and someone that's going to be in it for you. I know that's, sometimes I personally had a poor experience with a realtor, and I know that I was never going to do that, was where sometimes, greed gets in the way a little bit, and maybe not doing the right thing for your clients. And I just want everyone to be doing what's important for them, and kind of, it's not about me, it's about you. And I think we're all in that together here, that we're here to help you reach, the next step in your goal or your journey or your dreams. So finding someone that's relationship centered and, doing the right thing is important.
Well said.
Thank you, guys. What you do is so valuable and important, and I appreciate all of you and the relationship I have with you and the service you provide. So thanks for taking the time today. To the panelists,